Good stuff. Good stuff. Good stuff. Yeah, we're gonna get into a lot of good information here. A lot of good information. Mr. Goldfather is gonna kick it off for us in a few, and think are we gonna have a little Q&A session towards the end?
Yeah, we'll definitely have a Q&A session.
Okay, cool, cool, cool. So yeah, so get your questions ready, guys, and we'll get this stuff, get the show on the road.
Yeah, let's start in just one more minute. Cool, cool, cool. Preston, are you here?
Do you love Gantt charts? Here's how easily you can build one in Clicker.
Okay,
Oh,
cool.
you guys hear me?
Awesome. Where we at? Where's the Zoom at? Fresh Prince. Ha! That's facts. I do got the high top fade, the high top fade. Yeah, I kind of do look like the Fresh Prince. I'm not gonna hold you.
It's different. It's different. It's definitely different.
That's what happens. You feel me? When you follow that road, we leave a bunch of Fresh Prince for you guys. You heard?
I love it. I love it. Gotta mix it up every once in a while, right? Gotta mix it up.
So what is going on, everybody? Thank you for coming on the webinar. Obviously, we have the best female trader here in the game. If not, she's saving anybody coming up as well.
Oh, your mic is cutting out.
Now that I think about
Hold on, your mic
is cutting out.
Your mic is cutting out.
there's
Your mic is cutting out real bad, and your camera's frozen too. I think
you hear me?
I got
Hey,
to
press one. My mic.
What's going on, guys? So glad to have you all here.
Yeah, I think his Zoom.
My mic is cutting out bad.
We can hear you good now. Perfect now. Just now, but a second ago we didn't hear anything. No.
Okay, no, I was just saying that you're the best female trader in the game.
Thank you.
Not just best female trader. She's one of the best traders. One of the best traders.
That's a fact. But also, there is not I also want to give recognition to the fact that there's not many female traders, and that's what makes her very unique. You know what I'm saying? Like in this industry, it's a lot of dudes. I'm not gonna hold you. There's a lot of guys out here, but it's dope to see Charlene just holding it down, killing it.
Yeah, the ladies are coming. The ladies are
coming.
They're here. They have arrived.
That's a fact.
The ladies are here. They're here. Trust me, they're here.
You're coming. Facts. Where the ladies at?
Yes. Oh my God.
Drop some love in the chat.
Yes. Girls run the world. We run this world. You guys just live in it.
That's a fact.
Yeah.
Tell her we here. Yes. Hey, that's what I like to see.
Love it. Exactly. We've been here. We've been here,
right? From the dawn of time.
Yes.
Turn off the waiting room here. I'm gonna turn it off.
Oh, I think because either a waiting room or you have let me just make her a host too.
Yeah, if you go to the settings bar, I think it's the security bar. There's a little checkbox that says waiting room. You can just uncheck it, and it'll open up the waiting room, so everybody can have access, can get in. So.
Okay, awesome.
Yeah, the waiting room is good out. It's so weird. We just gotta admit them all. So glad to have all you guys coming on. 181 people in the building right now.
Hey, that's what I like to hear. That's what I like to see. Dude, I'm about to post a link. So you got blocked from Facebook for a couple of days. Oh my God, you can't post anything political on there.
Oh wow.
They were just yeah.
You were blocked completely, or were you just shadow banned, or?
No. I just got blocked for 7 days. It was really 30 days. I'm just coming out. I'm about to come home, guys. I'm just getting out the pen. You really? I'm getting out. It's crazy. Yeah. I was there for a minute, but they didn't let me post. They didn't let me reach out to my group. So
Gotcha.
Yeah, guys. We're on Telegram and Insta right now. But where was I? All right, cool. So Charlene, do you want to kick it off with the introduction? Just obviously, introducing yourself, how long you've been trading, etc. Just for some new people may hear that may not know you or me.
Absolutely, absolutely. So yeah, guys, my name is Charlene. I've been trading for about 6 years now. I primarily trade gold, and I'm a price action trader. A Wall Street Academy student. My mentor was Mr. Quillen Black, Eubanks, and Raja Banks as well. I learned from both. I kind of took both strategies, kind of merged it, made it into my own. I am a technical analysis scalper, right? Scalper for life. So scalper,
Hey.
we here. Okay.
Scalper gang.
Yes. So that's pretty much it. I mean, no bells and whistles. Just, I like to keep things simple, keep it quick. Yes, I see in the chat, I do trade AU as well. AU is more of my backup pair because it correlates very well with gold. But I love gold. Gold is queen. Gold is king and gold is queen.
That's a fact.
So yeah, and met up with Mr. Goldfather. Welcomed me in with open arms. We've been cool ever since. We finally met each other at the FX Summit.
Nothing ever feels awkward when you meet everyone for the first time. It just feels normal.
It's like family. It's like we're cousins. Like we're
right?
And trading, we're all our own little family. We have to be, because really we can only relate to other traders. We can't relate to anything else. So we have to stay connected. You know what I mean? So that's pretty much it. That's me, guys. SharlineFX. What you see is what you get.
That's perfect.
That's it.
So my name is Dimitri, aka the Goldfather. I've been trading for a while. I've been trading since I was like 19, 20. I am 30 now. Literally, I just hit 30 last year. Crazy. I'm officially done with my 20s, so I'm moving into a new age. It's crazy.
Hey, like fine wine. Yeah.
Moving into a new age. And I think, as time has progressed, I got better as a trader with maturity, right? The choices that I've made, the decisions that I decide to take, when I'm behind a trade, being a little bit more analytical. As the time goes by, the more that you trade and the more that you work on yourself as a character, as a whole, the better trader you become, right? So that's kind of what I've been doing. So I'm gonna kick off. Did you want to kick it off, or you want me to kick it off first?
This is your show, so I say let's you kick it off. Let's do it.
Right, cool. Cool. I will kick it off. Yes, I'll definitely kick it off.
Yes.
Get this.
So we're gonna be covering. Let's go over what we're gonna be covering for everybody again. It's gold, right?
Mm-hmm.
I think Nas, oil, and one other pair, right?
US 30.
Oil.
US 30. Yes.
Nas, oil, US 30. Give me 1 second, guys. Just give me 1 minute.
Yeah. Gotcha. How's everybody's trading week though? Had a pretty good week. I actually traded CPI news like a dum-dum, and I got smacked. I have one loss this week, and that one loss was CPI on Tuesday. So I hope that's one of the rules, guys, that I have. I don't trade news, but I actually traded news this week. I don't know why I did. I just I don't know. I was already in a trade and I was already in profit, so I decided to hold my position because I'm like, I think this is gonna go. I was in a buy. I was in buys on gold, AU, and US 30. And as you guys know, what happened, most of you who traded know what happened that day. And I ended up taking like a 8K loss. I think I lost about 8K on my account that day, which is not bad, but when you break your rules, that's what happens. So guys, if I can give you one piece of advice, stick to your rules.
Shout out to the transparency.
What's that?
I said shout out to the transparency.
Yeah. Hey, listen. You can only not show so much before people really know what's going on. A lot is really behind the scenes in trading. People know. They might not say anything, but they know.
That's a fact.
We all take L's, but no risk, no reward. No risk, no reward. You can't win unless you're in the game. So it is what it is.
No risk, no Rari, guys.
That's it.
That's a fact. Made 11K on CPI. That's a fact. So I'm gonna go over some stuff. I'm gonna have Charlene go over some stuff. I also have markets with May here, who's also she's fundamentals. She's been in the markets for like almost 30 plus years, a very long time. But she's just gonna kind of give a little analysis on what she thinks, you know, will happen in the market as far as like
25. I'm old, but I'm not that old, Dimitri.
But 25. Sorry. This is May. May, guys. May, you can introduce yourself.
Sorry, 20, and then education and stuff. But like,
okay, great. Great. Okay, cool. So really quick, I wanted to give some analysis on gold. Okay. Also wanted to talk about reformation of character when you're behind the chart. So what do you guys want me to start with? I'll let you guys choose. This is your show, guys. You guys want to start with reformation of character, or do you want to start with price action? Let's get some votes in the chat. Price. Price
action is king, baby.
Price action is king. Cool. Okay, cool. Awesome. You guys win. All right. So
let it go.
I personally like to I don't know, somebody's mic is on mute.
Get up from there.
Yeah, we should mute everybody except us because
yeah, hold on. Let me just do that real quick.
Put it back.
Everybody here, right?
Someone's television is playing in the background.
Okay, cool, we got them. All right, they're mute. I'm gonna. Cool. All right, cool. We got it. Preston, can you make Charlene admin again? Okay, cool. All right. Where was I? All right, cool. So I'm gonna start at the monthly. All right. What I'm looking at the monthly at first, honestly, when I was first analyzing this chart, it's pretty crazy. So when I was first analyzing this chart, let me take all this stuff off. Okay, when I was first analyzing this chart, I saw that price was actually going down originally, right? And then we had the whole banking collapse that occurred and the basis points that are raised, and that sent gold going up. So originally, my thought for gold was, since this is the highest point, and what I like to do is I start from the highest zone to the next highest zone. Even if it's like a pip off, I still put another level there, right? So boom, from 277 to 269, and then 1998. And then I have another zone right here at 1973. And then another zone right here at this highest point. See how there's this and this? At 1960.457. So let's just skip past this part real quick. Okay. And go to this point right here. When I first saw this point, I figured that price was going down, right? But obviously anything the fundamentals had changed, and then I'm looking at the monthly, and the monthly is really bullish. Yes, this is a resistance zone at the monthly. So if we see the monthly started down here, right? It originally started down here at this level. Okay. So surpassed, well, came back up to 1937, 1944, and consolidated for a bit around this level. Now that it's back at this level, for me, that psychologically indicates that there's something about this level that's significant, right? Because price just keeps coming back to it. And now it's coming back to it to the upside, not just the downside, but to the upside, right? Because if you look, it was up in January and went down in February and then came back. And this is almost like a monthly pullback in my eyes, right? When you're plotting zones, and make sure that your zones are very precise. You don't want to, okay, this is this little point of the zone, starting from here, right, at this level. I don't know if
I think we lost him here. His mic was cutting out a little bit here. Give him a second, guys, and he'll jump on in a second. Give him a
I
second.
think it's just reconnect.
Give him 1 second. I'll be right back on.
In the meantime, Charlene, did you want to go over any markups?
I think I would, but I think he's back now. I see him. He's there, but he's frozen. So let's see here. Let me see if he if he can come back on, and then if not, then I'll jump on. Okay.
Can you guys hear me?
Okay. I don't know if does he want me to take over while he's handling something, or yeah, sorry guys, the connection his connection isn't cooperating with us today. So just be patient and we'll get this show on the road for you guys.
Bro, tell her to unmute me. Oh, I'm unmuted? Okay, cool. Can you hear me?
Yes, we hear you.
Can you guys hear me better?
Yes.
Okay, perfect. Sorry about that, guys. Yeah, the connection got a little bit bad. I think it's fixed now. Okay, cool. So where was I? You guys hear me clear, right? Let me get a 1. One of you can hear me clear.
We hear you good. I hear you good.
Okay, cool. So where was I? So like I said, at this point right here at the 1820 level, 1821, we see that the monthly had held very strong here. Now, when we go back down to the weekly, what do we see? This exact same zone, right? This exact same zone. Now, in the past, the market came here, it came up, and it ended up dropping. But what I want you to look at is not the fact that it came up and it ended up dropping. Look at the fact that it came back to this level. So there's something about this level that is significant, right? That holds some importance, right? We could see even here, look at the stability of the zone, right? When I analyze a zone or I analyze the market, I analyze it as if it's almost a crime scene, right? When we look at a crime scene, we want to look at fingerprints, we want to look at the blood, we want to look at if there was any DNA that was on the floor. We want to look at everything that we can when we're looking at a crime scene. So that's why I like to go through and look at the very small, intricate, nitty-gritty points of the market, right? So I'm analyzing what happened, right? There was a lot of consolidation here and price had gone up. Now, if we put on this visible range indicator, you could see these are fair value areas and unfair value areas. So what that means is that this is a level where there's a massive amount of volume here, right? We see massive amount of volume between 1808 and 1780. This is an unfair value area. That means that price is moving freely, right? We see prices moving freely, right? Then we have a fair value area. The fair value area is when there's lots of consolidation. So I personally like to set mine to, which I'm gonna go over real quick. Bar says 1,000. Boom. Cool. Okay. Break it down for you real quick. Hold on. Cool. So you guys see this area? This area would be an area of fair value. This is the POC. The POC is where this is where the most volume occurred at this specific time, right? So at this specific time, this is where all the volume happened. That's why you have these long volume nodes right here. Now, anything below that, right? When we see anything below that, that means that's an unfair value zone, right? So right now, as far as the market goes, where are we moving up to in territory? Remember I said we want to put zone by zone. This is 1907. This is 1912. Okay, this is the POC where the most volume occurred. And this is the resistance, 1937. Okay, because there's this consolidation here, I don't want to wait. I don't want to just enter here because at the same time, I don't know. What if price hits this specific level like it did here and pulls back, right? At 1932, you could see this candle was pretty much just dried out by buyers, right? by sellers. Sellers just drowned it out and push price back down at this level. Okay. So anytime price was at this level, we saw pullbacks, and we saw pullbacks around these levels as well. Right. And as you can see, the level just gets lower and lower. So could this be the level? Could this current POC, point of control level, be where gold pulls back at? Or could it be another entry point for us to go? I personally, and I might get a little bit of shit for this, but I personally wouldn't enter this trade for a buy until it moves past 1938, right? Because I would be wanting to see if it is going to hold at any of these levels, any of these points of resistance. So for me, at this meantime, I'll be studying the pattern. I wouldn't necessarily be, you know, just entering a trade just cause. Okay? Boom, boom, boom. You just put it here, mark up the chart right here. All right. Now look at this level. Look at this level of trend line. So this whole area is a fair value zone. You see fair value when you see a lot of consolidation, guys. It's like being stuck in traffic. Imagine being stuck in traffic and you have a Ferrari or a Lambo or a really nice car and you're trying to move in that traffic. You're like, yo, I got the nicest car on the block and I can't even move in it because the traffic is there, right? This is where things slow up, right? But we can also capitalize on fair value areas. So for example, if price was instead here at the edge at 1938 and there was a lot of fair value around this zone, right? And there was unfair value on this zone, which is the smaller lots. So let's say this was just flipped upside down, basically. If the smaller nodes were at the top and these were at the bottom, then we would know that, okay, price is going to go up through the roof. But right now, there's these resistance levels. So we want to be careful before assuming that price is going to break through these zones when we have no idea, right? These price might have to stop off at 1931. It might have to stop off at 1937.803. We have no idea. So in that case, we want to wait. And I never put it like on the resistance zone. So if I have a buy stop, it's not going to be on the resistance zone because what if it activates and goes down? I put it a little bit higher. Okay. A little bit higher, maybe like 1942. I give it a chance. Okay. Look to my left. Okay. The next zone that I see is 1962, right? We have a little resistance here at the 1940 level, 49 level. But in the event that it does break up past this level, okay, around 1940, I still have the 1962 area that I could get in, right? Which I believe gold will hit 1962, 1963, considering everything that's happening right now with the economy and everything that's happening with the banks. Like, you know, Wells Fargo expects gold to go up to 3,000 plus. So there's that. But that's my analysis for gold. Just giving you guys a little quick analysis. Right here, you see is a major fair value area. I would wait for price to break out of this point, right? Out of this range, whether it breaks down to the downside of 1906. And then we capitalize off of the 1885 area, or it breaks 1942 and we capitalize to the 1960 area. Also, I've gone to look at the contracts on my other platform that I have. It shows me the entry points of where volume is at, like how many contracts are there, hedgers, spreaders, banks, institutions. You can see all the contracts that are there. So that's my analysis for gold, quick analysis. And again, I would say enter on the 1 hour to 2 hour timeframes, right? So I like to enter on a early time frame, and then I trend on the weekly to monthly. So even in this point, right, really quickly before I pass this to you guys, let me just delete this. Even at this point, right, at this point of resistance, look at this range, right? Look where price is staying on a range, right? As we started at 265, we dipped down here a little bit, but then we came back up to this level, kept dipping down, but we kept coming towards like the 18 to 780 range, right? Then price came up here to 2000. Dipped back down, but now we're back again at this level. We're back again at this range. So even when you look from a weekly perspective, right, and you see the chart, the reason why I'm not entering here is because what if this makes, and I hate to say the cliche, what is it? Where is it? What if this makes a double top, right? and it goes down. I'd rather not do that. I'd rather wait to see if price breaks on the 1 hour of 1941 where I set my zones up, and then I would rather enter there than just, blindly just buy just cause. And then we also see this level is a level of fair value, right? Which is these long volume nodes. And on the past, between 1961 and 1907, look at the breakthrough. Consolidation, breakthrough up, and consolidation, breakthrough down. At this level, consolidation, breakthrough, right? So consolidation has broke through these ranges. So my anticipation is that now we're in the same phase of consolidation around these areas, and price may hit 1960. So gotta go back down. So my entry would be 1941, and my take profit would be 1960. Stop loss and profit would be like 1946. Okay. Any questions you guys have? I'm going to pass the mic to Charlene. How many people agree or disagree with that analysis? What do you guys think? Agree. Okay. Yeah. 1 if you agree, 2 if you disagree. Or 3 if you think something else. Yeah, that's right. Yes, Bookmap does show you contracts, guys. It has a free site as well. You go to Bookmap and download it. But you'll see it there. Bookmap does teach that. I mean, it does have the levels of liquidity and contracts and orders that you guys could look at. Beautiful, beautiful. Okay. Charlene, would you like to take over?
Yes, sir. Yeah.
What do you want to go over?
I mean, you just went over gold. So, I mean, you want me to do another pair, I guess, or?
Yeah. I mean, you could go. What do you think for gold? Like, you could do 2 pairs. You're the queen here. Let's go.
Yeah. Well, let's ask the chat. Should I do gold, guys, or you guys want me to do AU? Something different? Because we just went over gold, so I don't know if I want to, go over that. Both. Both. Everyone's saying both.
I love you. They're like, look, we need to hear from Charlene too.
Yeah.
You can do whatever you want. AU's cool. Yeah, you can do AU, GU. Like, it's up to you.
Yeah. Let's knock out AU. All right. So I don't think I have the ability to share my screen. Here we go. All right. Boom. There we go. All right. So US 30, gold, and AU. Oops, right there. All right, cool. So US 30. All right, cool. So let's look at AU real quick, right? So you guys know I'm a scalper, right? I scalp. I don't look at the market from too big of a time frame because I don't quite need it. That doesn't mean that the high time frames don't matter. They absolutely matter. They will always matter. However, when you're scalping and you're looking for short moves in the market, it's not as important. Okay. So if we look at AU here, AU has been moving quite nicely, I gotta say. We did trend bullish here. We pulled back into this area here, and then we literally just shot right on back up, creating higher highs and higher lows. And then once we tapped this high up here a couple of times, we started the descent on down, and we haven't looked back since. So if I'm looking at AU, I would definitely keep my eye on this resistance area up here, because it seems like price failed to continue up to fill this area up here that has a whole bunch of liquidity sitting up here, but it failed to come up, right? We pushed down, we pushed back up. Even after we pushed down and we pushed back up again, we failed to make new highs. All we did was tap right on back inside this area. So as long as price holds this area here, I can definitely continue to look for the sell buys to continue back down. Now, if I simplify everything now, right? Usually what I like to do, guys, is I like to mark off all my highs, right? When your bias is sells, which it should be overall sells because the market is bearish, you always want to go with a higher time frame confirmation to give yourself the highest probability to profit on a trade, on a scalp. Okay, so if you're looking for sells, obviously you want to look for resistance levels that were formed and that are holding, because that's going to give you the highs that you want to look for to take your best entries. Okay, if you're looking to sell, you're looking to sell high and buy low. Okay, so if I'm looking here and I see that we have this area here that was kind of tapped a couple times, where we tested that area there, we pushed down, lower lows, lower highs, and then I see here that we tapped this area pretty much twice. So we have a little double top action going on here, and then prices slowly coming down. So now once I have that marked off, and this is, keep in mind the weekly time frame, okay, I'm going to mark off this low as well. Okay, because obviously that's going to be, you know, obviously a TP area that I want to look for price to come to. Okay, if the price continues to trend. Now the next thing I want to do is I want to obviously go down to my daily time frame, just to get an idea of what the market did before, because everything that happened prior is very important to what's going to happen in the future. The market, like I say all the time, it's a creature of habit. It does the same things over and over and over again. It's up to you to be able to identify those signals that the market is going to give you as to when it's going to do what it wants to do. So if I look here and I see the market structure, because we all know structure is king, right? Structure is everything. We see the market was very, very bullish, and then we started creating lower lows, lower highs. This is typically what you want to see. This is beautiful. This is sexy. This is clean. This is everything you want to see to take a trade. All this needs is patience. That's it. Patience for price to come back to a certain level for you to take a specific entry. So if I see the market is creating lower lows and lower highs, obviously I'm going to do the same exact thing that I did on the higher time frames. I'm going to start marking off my highs. Okay, boom, high there, have a high right there, high here, another high here. Okay. Okay, perfect. Okay, as you guys can see, every time the market made a move to the downside, it kind of consolidated for a little bit, right? Kind of moved sideways like this, right? Before we drop sideways, and then a drop, sideways, and then a drop. And after every drop, you see some sort of a pullback and some sort of bearish engulfing that's going to give you that signal for you to know when to enter into the market. Obviously, your engulfing candles tell you who's in control of the market. So if the market is giving you, you know, bearish drop, strong body bearish candles, obviously sellers are in control, and that's when you want to start looking for your entries after you get your pullbacks. Okay, after every engulfing candle, you want to wait on your pullback. Okay, so now let's say the market is here right now. What I'd be looking for here, guys, is for price to hold a specific level. You have to know your key levels. You have to know your support and resistance levels. You got to know your supply and demand levels, because those are the key levels that price likes to come back to. The market is like a giant magnet. It has specific price areas that price likes to come back to either test or to break through. Okay, whether or not price is going to break, you don't know. You have to pretty much wait to see what it does. But there's going to be certain signals that the market's going to tell you, that tells you if and when the market is going to break and how you're supposed to enter into the market. So if I see the market is consolidating and then we get a nice bearish drop, obviously after that drop, I'm waiting for price to pull back. Did we get that pullback here? Yeah, we see that price made a low. Price is coming up to make a high right in this area. So obviously I'm looking for price to continue down to create another lower low. If I know that's happening here, then obviously I'm going to mark off my zone that I want to see price respect. This is a key level. This is a key area to me. Why? Because price tested this area for several days before we dropped, indicating it's a strong area. Price tested that area, and then what did it take to break? It took a bullish engulfing, So if price is going to break back up into this area, it's going to need some sort of engulfing candle to break back. Okay, in which case I have a break of structure, and then obviously I need to be looking for the buys. But at this point in time, I'm going to be looking for my sells, because overall structure is bearish, guys. Overall, when in doubt, go with your high time frame bias. Okay, if you don't know which way the market is going, go back to your higher time frames, and whatever the trend is there, that's what you want to look for on your lower time frames. Once I come down to the daily and I see we were consolidating, we pushed up, test. If we respect this area here, guys, it's a no-brainer. It's a no-brainer. I'm looking for the sell to continue my bias. Okay, and at that point, I would just drop down to each time frame. I'd wait for price to give me my rejection areas, and then once I get my my bearish candle breaks, at that point, I'm looking to enter for me to take it right on down. Okay, that's pretty much it. I try to keep it, as simplistic as possible because that's just the way my brain works. There's no other way I could pretty much put it, but that's pretty much it. You're always waiting for price to come back to a certain level. After you identify that level, once price comes back to that level, you're not just waiting for price to get there, you're waiting to see how price reacts once it gets there. Once it gets there, the reaction to that level is going to tell you, hey, am I ready to take an entry? Do I need to wait a little bit longer? All that kind of stuff. It's going to tell you exactly what you want to see. So once you see that happening, guys, it's pretty much cake. My bias for tomorrow is going to be for sells. If I wake up tomorrow morning and price is sitting up under here, guess what? I'm looking for sells. The only way I'm looking for buys is if price was to break above this level, in which case I would be looking for a pullback because I have a break of structure and then to take price on up. All right, and that's pretty much AU. That's AU in a nutshell. That's exactly how I look at gold. Gold and AU pretty much correlate pretty well with each other for the most part. Don't ever trade them blindly with each other. Don't see gold pushing for buys and just blindly enter a buy on AU and vice versa. You always want to analyze them separately, but just know that yes, they do correlate with each other, but you still have to analyze them independently and give them, the respect that they both deserve because they're very good pairs. All right, guys, and that's pretty much it. That's my breakdown on AU here for tonight. So, what do you guys think? Pretty good, pretty clear. Is anybody disagreeing here? Let's get some feedback here. What pair do you want to see next? I would love to see oil get analyzed for sure. Okay.
Put up poll. You guys can vote on which pair you want to see next.
Yeah.
I don't know if you guys can see that.
All right, great. So I understand you better. GU, the gold, fire, awesome. Very good, fire breakdown. I owe Charlene a Rolex when I become full-time. Thank you. Appreciate it.
Yeah, that was gas.
Yeah, definitely. I love it how we see the charts, like we analyze so differently, but like the way we understand what we're looking at is so clear. It's
right. It's the clarity.
Yeah, I love it. Yeah, oil is setting up for a great swing. Yeah, let's look at oil. I'm anxious to look at oil with you because I know a lot of people that trade oil and I can't get it for the life of me. So I'm here to learn. I'm here to learn from the GOAT himself on oil. So let's do it.
Right, let me see if I can share my screen.
All right.
Oil's a little bit crazy. A little bit. This is oil. Oil was my ex-lover. This is like my ex-wife. But me and gold also have like our marriage, but oil, comes in and out. She's not my side chick. You know what I'm saying? It's not really the monogamy that is happening here, guys. It's poly, right? Where was that? All right, cool. So theme breakdown. All right, bet. Side chick. Oil is wiki. Yeah, oil is very wiki. So I had a setup for oil. Actually, this was way before, like a couple days ago. It's what I saw from the weekly chart. So again, like pretty much what I do is, I trade the same on for every pair, but oil is a little bit more volatile, a little bit unpredictable in a sense than gold, but they do have a correlation as well, right? They say oil is like black gold. That's what they say. Okay. So cool. So let's start here from the monthly, right? Let's just kind of analyze what happened from the monthly. We don't need to go too far. I think this is a pretty standard place we could start, right? In 08, right? So again, I'm starting at the top, moving my zone down to the third point. And I look at like buyers that are trying to come up, almost equivalent to being underwater and you're drowning and you're trying to come up for air, but you can't, right? That's what I keep looking at these lower lows like. Right? And so we see oil, the highest point oil was at was 147.35. So you want to set what's called reference levels, guys, where when you look at one level, okay, reference levels, okay? These reference levels are going to kind of let you know where price was last, right? You're knowing the last point that price got to. Okay, so that's one point of the level. Then you want to go to the second point, which is 120, 130.05. Okay, that's the second reference level. The third reference level we have, and I like to put it on the highest points of the wicks, like very high wicks, as you can see. This wouldn't be considered too much of a high wick, but this one is, right? Where the exhaustion is, that's where you want to put it at. Okay, so here's another one. Here would be more of just the resistance, still a reference level, but obviously with the wicks, we get more of the character that you can see that the market is at, right? Now, boom, boom, boom. Cool. All right. Now let's look at this point, right? So this is the highest point. These were the second highest points, right? And then this was this was the second highest points, and these were the third. So this was the second highest point was 130, and the third one was 112, and this would be the first, right? So check this out. At this level right now that we see, this is the POC level, like I said, the point of control, right? So I'm looking at the monthly chart, and the reason why I look at the monthly chart is I'm a swing trader, right? So I look at it as like being a fortune teller in a sense. Would I rather predict the next 20 minutes, or would I rather predict the next 2 months, right? Predicting the next 20 minutes, anything could happen, right? Like I'm more likely to know what could happen, but it's more cooler, right? If you could predict 2 months. No offense to the scalpers. I love my scalpers. But for me, it's a little bit cooler if I can predict 2 months ahead rather than 2 weeks ahead. Or 2 days ahead or 2 hours ahead, right? To me, it's a cooler superpower, right? So, and it's what's work. It personally is what works for me. Like if I scalp, I get like anxiety, like crazy. I don't know. I got to close this out. I don't know what I got to do. Right. It's nuts. Right. So I really admire scalpers, but for me, swinging, I love to swing and kind of get the overall trend. Right. That way I don't get anxiety buying and selling and buying and selling and buying and selling. I just like, okay, you know what? I'm going to stay in this swing, and this is what I think is going to happen overall in the move. So that's why I start at the monthly. Now, when I start at the monthly, I like to label my zones, my reference levels to see the points that price were at before and the dramatic impact that happened at them. So at this point, we've had prices drop straight down for over 1,000 pips, right? At this point, we had price down for over 676. And at these points right here, specifically here, we had price drop just like over 1,000 points at these levels, right? So we can see there was a dramatic turn in these reference levels of price moving down, right? So now when we go here, right here on this resistance zone, I'm gonna zoom in a little bit more. Right here is where we see the fair value area, right? What we see right here is a level of consolidation, right? So price is moving side to side. This is where the buildup is happening. It's like being pissed off and you're just holding it in and you're like, yeah, I wish I could curse that person out. But you're like, you know what? I'm gonna hold it in and chill, right? And so they start tapping and tapping and tapping and tapping, and you just freaking explode, right? That's the same thing that happens at price in this scenario, right? Price is building itself up. These orders are building themselves up between 86 and 68. And then what happens, right? They end up breaking out. So I think that price is at this level where we may break out of this zone, right? In particular. And not just that, we also come here to the side. We can see you have a trend line, right? Even if you want to get creative and do this, right? Let's say you don't want to put your trend line all the way. All right, boom. All right, got your points here. Your level. What kind of sucks is that there's a certain point that you can zoom in and zoom out on the levels, right? So here we see that this is the fair value zone. So look at that large ass nod, right? This large nod, like I said before, is an indicator that price is heavy here. The traffic is heavy here, right? That's why we have a large level of consolidation here too as well. Look at all that consolidation. It's literally mimicking what is exactly happening on the chart, right? Now, once we move under that consolidation, under that fair value, okay, we see that this is an unfair value area. So we see that there's more space for price to actually move, right? So once price breaks out of this level, this is the POC, okay? My reference level would be here, right? So let's say my entry point is somewhere around here. Let's just say, right? And we're not looking from we're not going to just do this trade from the monthly perspective, but let's just say it's here. My stop loss would be somewhere around here, right? Yeah, my entry was all right. My entry was here. My stop loss would be somewhere around here, a little bit lower. Right? Boom. Okay. And I would put my stop loss almost near where the consolidation is, right? Where we see prices keep moving sideways, right? Because here's where the unfair value area is. Here's where everything stops. So I probably put my stop loss where everything was consolidating, right? More than likely. Now, if price breaks out of this level, okay, you want to get it exact, guys. See how my zones are right here on these points of resistance? Okay. Because when you're in a market this volatile, you want to just pinpoint every point. Like every wick is almost important, right? So see these zones right here? This is like another reference level, right? And then my entry would be at the break of 59.63. So at 59.63, actually a little bit lower because there's this wick right here. You can't trust oil. Oil is very distrusting. It's a distrusting pair, okay? I would probably end up taking profit near here, right? If I was entering on the monthly, which I would never enter on the monthly. So don't ever I don't want to hear anybody say I told them that, right? Don't ever enter on the monthly, but give yourself a chance to look at the monthly perspective of what's happening, right? And when we make these reference levels, it's great because we could say, okay, well, this is where price was before it was going to shoot up for a buy, right? We analyzed that there was a fake buy that was here, right? Within the trend, within this full trend. That fake buy came up here, that 92.98 reference level. And then this level here, which was 76.46. So if price stays below 76.76 right here, this is one of my key levels. If price stays below here and does not move back, right? So we go on the weekly, we go on the 12-hour. Look at the weekly. See how this is a level of consolidation? If price stays right here, right, anything below here, I'm going to be selling, right? So this is going to be my level of an exit. 76.48 will be my level of exit. So in the event that price comes back up, like right around this area, 83.55 and 76 or 77.09, I'm going to make sure that I'm out of any sells. But my sell analysis stays due to this because even on the weekly, we could see here, at this point on the weekly, we could see price is consolidating heavy between 82 and 69.00. So this lets me know that if this is a weekly buildup, that oil will more than likely drop between these levels. I think we could see oil drop to 56.8, right? We keep going down to a lower time frame. We want to find our entry points. What's happening here? Okay. We put another resistance zone here at this point. Okay. Now between 69.64 and this level right here, 65.06. I want to see price break out of this area to go down to the next level. So I'll be analyzing between right now 69 and 65. And this is what personally works for me. I know it's a little bit weird way to trade for you guys probably, but this is what works for me. I like to look into the nitty gritty, even the smallest points of the price action. So this level is a level to analyze because it's in consolidation. So which way will it move, right? At this point, we had buyers here and then it got trapped out. Buyers have been trying to go up for the longest and sellers have just been pushing them back down. So let's see how price reacts to these levels and then I shall proceed. But right now, this is where we're at. So will price stay at this level of oil or will we go down? Because now that we're on a lower time frame, look. So I start from the monthly because my monthly target, let's say my monthly target may be here, right? My monthly target may be 56 and 44, but I'm not going to enter on 56 and 44. I'm going to enter in on the hour or 4 hour and find out where the trend is actually going. So in the event that the trend ends up breaking here at 64, 65, and this trend line ends up hitting and going past this level, then I know I could go down to 56. Then from 56, I could scale down to 44. But I go from the monthly to the weekly to the 12-hour to the 4-hour, and that's how I kind of do it. So I have a monthly entry that I want to aim at, and then I'll find my entry point through 1 and 4 hours. Does that make sense? That makes sense to you guys? Press 1. Cool. How many people agree with that analysis? If you disagree, it's cool. I'm chilling, guys. I want everybody's opinion on what they think. Okay. Because at the end of the day, I could be wrong, right? You could be right.
I think everybody's in agreement.
How do I find my entries? I find my entries from going down to the hour time frame. So the hour, 4 hour, my targets are based off of monthly. So what I see the trend for in the monthly, because the consolidation is monthly here for oil. So I think price will more than likely break out of this. And I like to find consolidation points with oil. I don't just trade the highs and the lows, but I like to find breakouts that happen. I'm a breakout trader when it comes to oil, just because I feel it's a more careful way to trade. Oil is very unpredictable sometimes. And so I feel narrowing it down to if the consolidation phases happen and the fair value area happens, I feel that's always the best.
They're asking, what confirmations do you use to know to enter? Do you use candlesticks or?
Yes. So the confirmations that I use to enter, one, my confirmations are also all based on, like I said, going from the monthly down to the weekly, right? I do use the volume indicator, which I showed you guys, which is here. I'm not sure why it's not showing right now. Yeah, so I use the volume indicator, and these give me entry points too, right? Because if I know that this is a fair value area right here, right? And this is a bunch of consolidation that's on this level, then I know, okay, once price breaks out of this level, right, or out of this point, we can get in. See, even here, like you can see it, like this was a fair value, right? But once it got out of this, once it was like zero spikes, zero volume nods, look how it just went down. So the volume indicator is also a point of my entry points, because I'm able to identify where fair value is and where unfair value is. If I could identify where the volume is at, then I could have a better set entry point. That just makes more sense, right? Hold on, stay on page. Okay. So example, like right here, this is, look, fair value. Notice once it moved past this level, like once it got out of this point, look here, look exactly on the trend right here. See that? See how it moved like identical to where the consolidation was? And then once it got to this point, it started to consolidate again. And then when it got out, it started moving. See that? So these are also my sense of entry points of where I get in and get at. I do look at candlesticks. I do look at line chart.
There's some type of noise background. I don't know what that is, but there. Okay, it's gone now.
Yeah. The entries have been on point. Otherwise, the back window runs you. Yes. So also wicks. I like to go off wicks, like very long and exhausted wicks. So a wick like this, let's just say for an example, I wouldn't buy right here in this point, but a wick like this, see how the wick is very long, 260 pips, and then there's a pullback at 125. Okay, out of the 260 pips, 125 wick back. It's a little bit more than half, right? So I use, is it less than half or more than half? Also for my entry points. So if I find like there's a fair value zone, right, and prices at a fair value, right, which is not really at a fair value here, but let's say this was down here. If I found that was down here and this was the entry point and there was no resistance prior to here, then I would take it to the next level of here, because I identify that this is more than half, right? I scale the whole wick, which I see it's 266. Out of that 266, the wick back for the buy at this point for the open is 127. So that's more than half. So if I see prices consolidating prior to that and then this wick comes up, yes, I will take it to the next level. Right now we're in a resistance zone, so I probably wouldn't take it. And the market just looks very choppy here, but you can find other entry points. For example, like this is a perfect point, right? Love taking candlesticks like these and catching fair value, because if I see that this is 94 points total, out of the whole 94 points, 79 wick back, that's more than half. That's more than half of the wick, right? We could see, okay, right, replay, right? We see that there is fair value area at the zone, so there's a lot of fair value. And at these points, this point right here, this is where the fair value gets shorter and shorter, and then it picks back up again, right? So my entry points are based on where there's a free zone. That's 79, 76, 60, all the way to this point is a free zone, right? Then we have here again is a free zone, then consolidation.
You're muted. Dimitri, you're muted.
Yeah, okay. So that's pretty much my analysis. You guys see that? Boom. That's pretty much my analysis of like entry and exit points using fair volume and unfair volume. I'm gonna let May now go over the markets. May, do you want to talk?
She's muted.
Oh, she is?
Yeah.
Oh, can you guys unmute her? May?
Yeah.
Is she
Hey,
muted?
sorry, can you hear me okay?
Yeah, we can hear you.
Oh, cool. Okay. So I don't know if you can see me okay, but oh, sorry. Let's see. There's not really too much that I have to share. There's a lot of news flow going on, so you have to be super careful.
Could just introduce yourself to the audience.
Oh, sorry. I do market fundamentals, economic data, etc. And my style of trading is more investment, like longer term oriented. So, but I would say right now, because the market is really kind of crazy, you got a lot of very big players in it, particularly in currency, but also in oil. You do have to be a little bit careful. So today we had an announcement from the ECB. They raised rates 50 basis points. The market rallied on that. I know a lot of you guys saw it, and I didn't look across all the commodities to see how it behaved, but the marketplace really has to absorb this, because here's the deal. The European economy is really weak, and the US economy, it's going to take a while. I can just kind of see it trickling through the news flow. Goldman Sachs has already come out and been like, look, they're going to have to lower 25 basis points. And, my background's Goldman. It's so funny because I've checked in with a bunch of my Goldman friends, and we're like, we have no idea why anyone thinks that rates are going up. These people are nuts. The reason we think they're nuts is because the issue at the heart of this right here, because we don't have any companies that went bankrupt, there were no defaults, there were no big blowups. As a result, the only thing it could possibly be is the rate increase from last year going like this, making it so that everybody's like, I'm not buying any bonds because bonds from yesterday aren't going to yield me what bonds from tomorrow are going to yield. If we keep raising rates like this, all that's going to happen is you're going to have more bank blowups. And so essentially, when I'm looking at the news flow right now, I'm trying to figure out how the Fed is going to be able to turn, like, how everything is a story. If the Fed were to come out tomorrow and lower interest rates by 25 basis points, right this minute, the market will react nasty, even though it's the right thing to do. So they've actually got to do kind of a series of things. We're in a bank crash, but we're not there yet. Okay. Because if they can't figure out a storyline that the rest of the world is going to eat, then they won't be able to lower interest rates without really crazy activity in this marketplace. So every day is a new day, essentially. So what I would say about that then is we need to try. So I've been polling the marketplace regularly on my Twitter, and I've just been listening, trying to hear what the different talking heads are trying to say. This 50 basis point interest rate increase on the ECB, some people are going to say, well, that means the US can raise by 50 basis points, but our banking systems are very different as far as that goes. Additionally, you have capital flight risk in Europe, which you do not have in the United States. Where are you going to go to if it's away from the US dollar? If you have that kind of size, let me put a pin in that, because there are some places you go, namely gold. But given that that's the circumstance, that the marketplace has to move to 25 basis points, we should see wild volatility until the FOMC meeting across all the major market indices on the equity side until Wednesday of next week. And you're just gonna have to watch it to figure out how long it's going to take for everybody to eat this storyline. Because if we raise interest rates, all that's going to happen is the debt capital markets are going to continue to not allow these companies to clear the debt portion of the balance sheet. And since we in a fractional reserve system, if you can't clear that debt, all that's going to happen is everything that's available for sale is going to turn into held to maturity, that you keep hearing about. And that's going to crash the system. So that's a problem. So
question.
Sorry, we got a lot of questions. You want me to pause?
Oh, yeah. Someone asked you if someone said, May, is it safe to keep my savings in Bank of America? I've got 10K in savings and I don't want to lose it.
Okay, here's what you do. And I've been telling everybody this. Right this minute, FDIC will absolutely insure everything. If you get too many banks that collapse, or if you get too much weirdness going on, that's going to be subject to change, okay? Which no matter, I think anyone in this kind of scenario wants to take out at least 1 to 3 months worth of just spending expenses. Because if the banks really collapse, you're going to be able to talk to your landlord and say, hey, yo, come on. Like, you know what I mean? And I have the money, it's clearly locked up in this bank. But honestly, anyone, it's just like if you had a hurricane, you got a little extra canned food going on, it's not that big of a deal. The real problem is if you really can't get to the grocery store, okay? So I would say take out about a month's worth of food expenses if you're in, and if you got a safe in your house, stick it in there, because obviously you want to be careful about that stuff. If you can as well, go ahead and have a second bank account as an option, so that if each day that passes gets weird specifically for the bank you're in, you can go ahead and start a transfer of your capital from one place to some place that seems safer. There's not really, I actually think the credit unions, somebody asked me this question on a different talk I was giving, and some people were like, well, where's a safe place? Really, oddly enough, I think the credit unions aren't bad. You have to double check that your local credit union actually has insurance. Some of them do, some of them do not, but they will clearly state their insurance and also how much that insurance covers for. And some, Navy Federal is wonderful. Actually, I checked that for someone. They have insurance up to $250,000. There's a few other credit unions that only insure up to $100,000. You need to just check is really what it is. Each and every single one's going to be different. But there's various reasons, which I won't get into, and I don't want to panic you. But because of the various reasons for why some of the bigger banks are susceptible, these credit unions aren't going to have that same weirdness to them. But you do want to make sure that your stuff is insured, and you still want to kind of hold a little bit just in case, so you got some cash on you. Unless you're a gold trader and you happen to have a bunch of gold on you, then, put that gold where you can get to it a little bit. So that's the worst case scenario. Now, there's many scenarios where we come out of this and actually, if the Fed starts to lower rates, people are asking how much. Let's just not worry about that until we get to it. But right now it's really more about, can we stabilize these banks? There's a big capital infusion going into First Republic. And First Republic got about 30 billion. Now I think it's a crazy number one, that they're giving First Republic. And also it's crazy how it's being given. And let me be clear on that. Wells Fargo just filed for a shelf registration to raise themselves $9 billion worth of capital. And somehow they magically had enough to give First Republic $5 billion. So it is that weird right now. So I know what this is. It's basically everybody who has a couple extra months of liquidity is giving it to people that don't have a couple extra months of liquidity. So in other words, it's like, if I'm good for it, but I'm just not liquid, my paycheck don't come until tomorrow, then basically someone else who already has their paycheck and knows I'm good for it is going to go ahead and give it to me, and I'm going to hand over my paycheck when I have time. That's what's actually happening right now in the banking system, is that on a dime. So we're going to have to just watch it every single day. Now with Europe, it's really interesting because they went ahead and raised rates, but the fact of the matter is their systems are weaker than ours, because they have definitely not as many levers to pull, and they've been in crisis for a while because they're right on the front line of paying for that war. We're kind of basically still selling them stuff. So that's the thing I would mention there. So we just have to kind of watch it and see. It will be a wild ride. I think these charts and you guys checking in with this group is probably really, really good, because these things are going to turn, very, very quickly. And it's going to be very exciting, I think, for everybody on this team to watch these charts and where it ends up sitting. But that also means that every single announcement can also flip the switch on a dime. So in any kind of situation where you've got this kind of uncertainty, it's big swings, much faster than you normally expect, and reversals really, really fast is what you'd expect. Okay. The other things I would just mention that might be relevant, we were just talking about oil, and it was interesting because Dimitri was right. Oil used to be black gold, but everything he's reading on the charts is saying down. And the weirdness of that is that I actually was really curious about how oil was traded myself. So I was really excited to hear that analysis. But because the Chinese have been on this thing where they're all about trying to transition oil to the Chinese dollar, the yuan, the Chinese renminbi, whatever you want to call it, because they want to do that. There's a lot of oddity behavior going on in oil. Additionally, because people have been saying that they're buying the Chinese are buying Russian oil well under $60 a barrel. And we've been trying to sell it closer to 70, 80. And that is just, in fairness, we do have a shortage of oil in general going on. So it's a really weird picture of what ends up being the true market clearing price. So that's creating a lot of extra volatility in oil. I think the chartists are going to win the day on this. It's not going to be anything to do with the fundamentals. It doesn't matter how much supply and demand is. It just matters how much people are trying to game this right this minute. So I was very interested to hear that part of the analysis. I saw some questions come through. Were there some questions?
Yeah, Chauncey said, where did all this money come from if people are failing and requesting money? Wild times we're in.
Wait, say that to me again.
He asked, where did all this money come in from if people are failing and they have to request other people for money? I think that's what he's asking.
Oh, okay. I think I understand the question. Here's the deal. Every bank, this is something that I'm going to do my best to explain, but it does take a minute. The vocab word is fractional reserve system. You guys have probably heard it more than once, but it does take a half a minute to really understand what it is. But what it really means is that every single bank, when you give them your deposits, they lend it out. That's how they make their money. So you got like kind of a difference in timing. It's just like, your landlord, when you give him money, he's going to go invest that in something else. It's not even that these banks are spending the money. But what happens when you have a bank run is that people need their money back, but you went ahead and invested it. So now you got to sell that asset off in the cheap. The thing that's disturbing about Silicon Valley Bank isn't like nothing went bankrupt and the press media is trying to blame it on held to maturity assets. But I got news for you. Every single bank has held to maturity assets. And all held to maturity assets is the idea that there were some things that, well, okay, this is a little bit complex, but let me try to make it simple. It's like this. If you had, if you had invested all your money in your house, right? And then you had a bunch of money that you were using to pay your bills, you know what I mean? A bunch of money to pay your bills, but then something happened where basically all that money was gone. It's not like you don't have any money. You're what they call asset rich, cash poor. But the problem is when all the banks are asset rich and cash poor at the same time, you got to go sell it. Everybody's in the same boat. So they're going to offer you a lot less for your asset. They're going to offer you a lot less for your house. And so this is what happened with Silicon Valley Bank. The stuff that they had to go and sell, no one wanted to buy it except at a massive discount. It's kind of like when you have to go to the pawn shop, you're not getting what that thing is worth, even though he could sell it like tomorrow and literally get 1.5x or whatever it is. And that's happening across the entire capital markets, across all the debt markets. That's what's putting the stress on the banks right now. And some of them just happen to have 2 months of rent versus 1 month of rent versus they need the money tomorrow. That's literally what's going on. And it exists not just here, but all over the world. There's not a place that doesn't have it. Were there other questions? Oh, we're not about to die. It's going to be okay. It's just going to take a little bit of time. It's just going to take a little bit of time, but it will make for an incredibly interesting market environment. And that's really great for traders. So if you're really good at trading these markets, then you potentially could make out winner, chicken dinner, because you definitely will get a lot of volatility.
May, if you don't mind me asking, is what we're seeing with the banks, is this something that we could also see happen with, like, for example, different investment firms, like not necessarily?
Yes, you're not wrong on that at all.
Hedge funds, really things like that.
It's a really, really good question. And it's the perfect question to ask, because one of the things that will probably happen, but it's got to happen in lockstep. see, with 25 basis points, you got to think about with rates going up, right? Whenever rates go up, the treasuries in theory offer you more than the bonds that you already own on your balance sheet. It's like, it's like this, you know, if you know, and so there's no incentive for you to go and buy the bonds from somebody else because you can't even get rid of your own bonds. So you want to be liquid because you know it's not like it's not forever, so to speak. If rates start to decline, what it will do is it will allow the asset managers to start buying this stuff up. And that will actually take off a lot of pressure from the existing banks. The asset managers don't have to take marks. Like we are like everybody here is a trader. You take your mark at the end of the day, whether you like it or not. And if you're a swing trader, you better have enough cash for that mark. If you're a day trader, you're gonna close it out and pray that, you know, everything closes in perfectly, right? If you're an asset manager, you have to take your marks essentially quarterly. So I think one of the things that you will see happen, but it will mean that the Fed's going to probably have to lower rates because I don't know that it's necessarily safe. You might see some of it happening already, but some of the asset managers are going to go ahead and try to buy some of the assets off of the various banks that are going bankrupt. So that's piece one of what will happen on the asset managers. Piece two is there's some asset managers that also are holding the bag themselves. And so you got to watch for that asset manager by asset manager. Additionally, some of the broker dealers are attached. They're attached to a bank. And so they're beholden to daily marks as well. Now, your bigger ones, Goldman Sachs, Morgan Stanley, they went ahead and took a lot of extra capital in at the fourth quarter. And they were like, no, we're going to go ahead and provision, like Goldman Sachs literally provisioned $1 billion for it. Okay. Just to give you a sense for it. And they're both holding actually a little bit more capital than Silicon Valley Bank was, despite the fact they don't necessarily need to. Schwab, when it was going crazy the other day, but they've got a capital infusion since then. But Schwab, when it was going crazy, the stock price was going crazy the other day. It was because they came into the year a little short. They came in at 7% CET capital buffer. The buffer is 8% is what you're supposed to be holding if you have a bank. But because they just did an acquisition, they've still been merging, there's some other things going on, they were allowed to have 7%. So Schwab was in kind of a weak spot. I think they've shorted up though in the last day or so. That's how fast these things move when the market is crazy like this. But if you have an account at Schwab, personally, I think they'll be fine. But just to be sure, because it takes time to open a brokerage account somewhere else, investigate that for yourself sooner versus later.
Thank you so much, May. Thank you so much.
I would say this, if the firm is a member of, it is properly registered, it's not a foreign brokerage firm, it may be covered under this type of insurance called SIPC. SIPC covers your assets, I believe up to $1 million. You just have to check. And then some portion, or 500,000, something like that. And a portion of that, it'll cover in cash, but just double check this stuff. This stuff's all in the internet. You don't have to take my word for it, but just make sure that your broker dealer has that SIPC insurance. You will, now the challenge is if it goes into that situation, you don't get to cover your positions. You're gonna have to hold your position, wait till they liquidate you. So that's kind of a pain if you got a one-sided position or if you're not a day trader. So just watch for that. But otherwise, that's what you're looking for is that SIPC insurance. If you can bring it to cash, at least you won't have the you know what I mean?
Someone also asked, Shayna asked, how does this affect the housing market for home buyers?
Okay, this is a really good question. If they start to lower rates, then just give it a half a beat, because if they start to lower, this is what I think will happen, unless we can stabilize these banks in the over the weekend, okay? Because we got tomorrow, questionably stabilized, a lot of announcements this week, and then whatever the powers that be, we got to see how it opens up on Monday morning. Tomorrow, I think people are just exhausted. So tomorrow will be what it will be, and knock on wood that First Republic doesn't go under as well and get everybody all freaked out. Okay. But if they can't stabilize it, the FOMC meeting is on Wednesday. We'll get another data point. He's got to figure a way to communicate some sort of confidence without freaking people out. But essentially, you would wait until some of this mess. So if you've got a bunch of cash on you, because you're like, I've been wanting to buy a house, this is my chance, right? You got a bunch of cash on you. What you would do is you would essentially just wait either for the stabilization of the banks, or you could wait for if they actually do start lowering rates, see if the range of people that I've talked to on what needs to be lowered is somewhere between 50 basis points to a full percent. Okay. So just wait for it is really what it is. Now, if you're in a state like California going to be a hot mess right now because they've still got to unwind the loan portion of Silicon Valley Bank. And there are some loans there that are mortgage loans. So there's going to be some craziness going on there. If you're in California, a different story, just watch for it because your market's going to do some very specific things. Hopefully that's helpful.
Yes, that is very helpful. And May, just because, I really appreciate you coming on here, are new to the gold mines community. If you want to take, just a couple of moments to really, kind of let the audience know kind of about your experience, your certifications, accolades, and just kind of, what you've been through and what you can share with us.
Oh, okay. So I really am just kind of, semi-retired, I guess I always call it, but I started working in markets in 99. And I was working in equities always, and then I have done credit default swaps for a period of time. So I always worked at the big investment banks. So, I did credit default swaps for a very short period of time. And then I managed a big short portfolio book. I had to hedge everyone at this big hedge fund. And then after that, I did risk and analytics and corporate strategy for a bunch of funds for like 8-9 years, something like that. So I've been working since, I guess it's like 23 years. It's easy because 24 years, something like that, 23, 99, whatever was 99. And then I did some school in between there a little bit. So that's me in a nutshell. I don't know if that's helpful. I'm never really good at giving, I used to be really good at giving these really fancy descriptions of what I do, but all of us, it doesn't matter what you did. You got some money, you're trading in the markets. That's really about all that matters. And the market can take my money just as fast as it can take yours. So I really like to give, I might know a few things that are helpful, but ultimately, you got to make your own decisions as you're learning it.
That's right. That's right. And so guys, what we're trying to teach you here today, the wisdom and the knowledge we're trying to give you, these are all things that you can learn to apply to your trading, right? Whether it's Dimitri's strategies or Charlene's strategies. You also have, May's fundamentals. Having fundamental knowledge of the market is important, right? You can have, a lot of times you can have the best strategy, but if you're lacking in that fundamentals, that wisdom, then you're not going to have the conviction to follow through with your trades. If you want to learn, how to really trade and how to find the best entries and, apply your fundamentals with technical analysis, you guys can definitely tap into Gold Mines. I'm going to just put the link in the chat here. And so there, you guys can tap in and see, Dimitri's course. You can learn the strategies that he uses, some of the strategies he's shown here, but a lot of them were not shown here, guys. So definitely something that you want to take a look at and try to take advantage of. Charlene, I don't know if you had anything you wanted to share.
No, I mean, we got a lot covered here today. That was excellent information, May. I actually definitely learned a lot from you. So definitely gonna be gonna be hitting you up for sure. That was
cool. I was watching your analysis. It was really good to watch.
Thank you. That was amazing information. Definitely learned a lot.
Yes, May is definitely a villain when it comes to the fundamentals market. Yeah, guys, but that was pretty much sums up everything. If you got Charlene, if you want to shout out your Instagram and kind of where people can, find.
I'll do you one easier. I'll just drop my link tree in there, and
Perfect.
they can go straight there. Okay. And my Instagram is SharlineFX, the way it's listed right here on the Zoom, just like that. Okay, a lot of fake pages, so just be careful with that, guys.
Right, that happens all the time.
Yeah.
So now I'll put mine. Mine here is the Gold Father. I always my link tree sometimes gets messed up, but I'll put it here. Wait, okay, actually, wait, did I put it right?
Someone also asked for the signals. You guys can find Dimitri's VIP signals right there. I put the link there.
There we go. Cool. And then May, you want to drop your stuff?
I'm just at Markets with May on everything, Twitter, Instagram, YouTube, whatever, as far as that goes. But I'll stick it here. So in every single one, it's the same.
Yes, sir.
This was very informational. I hope everybody was able to get as much as
Yeah,
you
this is great. I hope we have this recorded.
could.
You could definitely drop this. Yeah. May also does
Somebody's jamming.
Somebody's jamming. May also does fundamentals for gold mines in the Telegram. It's in the free Telegram. Not so much in the VIP, but sometimes in the VIP. But she just started giving some like fundamentals and kind of her thoughts on the gold and other like pairs like Nas 100, stock market in general. And she is incredible with fundamentals. Like I don't even know.
Thanks, guys. This was nice.
She's good. She's good. Yeah, she's great. Please, this was gold. Yeah, how many people would want the recording?
For sure.
All right, cool. So if you guys want the recording, what I want you guys to do is go and tag Charlene and May. You guys should do a webinar together too. That'd be cool. Cool female webinar team up.
Oh yeah. That would be pretty cool.
Have a little
That would
girl
be cool.
power, yeah. Yeah, if you guys want the recording, so definitely tag all three of us on your stories. I'm also gonna put Charlene, do you have like a Facebook group or anything like that?
I do not. I have a Facebook, but I'm hardly ever on it, so I wouldn't.
Damn, she's saying I'm old. That's what she's saying, guys.
I
You're
don't
old ass using Facebook.
know. Yeah.
Cool. So this is the Facebook group. Yeah, female traders take it over, definitely. So what I want you guys to do is go ahead and tag me and Charlene and May on your stories. If you guys want to get the recording, we do have the recording. Actually, it's recording on my end, so and Preston's end, and I'm sure it's recording on May's end and everything else. But those who don't have the recording right now, we will drop the recording to you guys. And yeah, let's get it. So yeah, guys, tag me, Charlene, May on a story. Okay, so you guys have a very hard time following directions sometimes. Like, wait, what did they like tag me in a post? I'm like, bro, why am I on this post? Like, what?
Guys, so we're gonna upload this to the YouTube, but in order for us to do that, we do want you guys to show us some love and support as well in exchange for providing the free value that we do. You guys could please make sure you tag Charlene, tag May, tag Dimitri. We're giving value to you guys, and we want to see that it's appreciated, right? You guys show love and repost and support the people that help you make money. We'll continue to give you more value, guys.
Absolutely. And just for those of you that don't know, I'm going to be trading live on YouTube starting Monday. So that should be pretty interesting. So make sure you guys check up on that on my YouTube channel and get as much information as you possibly can. Everyone's asking for US 30. What do you think, Dimitri?
US 30?
Yeah. Yeah, I don't know. Because we kind of went over that a little bit.
We did kind of go overboard. We should save it for another webinar.
Yeah, let's do that.
Let's do that. We'll save it for another one. We'll give it to you guys the next time.
All right.
Cool. Perfect. Thank you guys so much. Drop some heat if you guys really love the webinar before you exit. Drop some heat for us. Hearts. Hey. Shout out to all the boss ladies, the upcoming female traders. They're already fire female traders.
Yes.
Shout out to everybody up.
Everyone in here is fire. Everyone here is
hot right now.
Yes.
The flame with the crying emoji. Yeah, definitely. I'm also gonna be in Miami. I'm gonna be in Chicago and Atlanta. Definitely dropping some jewels for you guys. That's probably gonna be in the next 2 months. I'm gonna do that. Charlene may pop out. I hope you do pop out. I want her to pop out.
I just might.
She just might. She should pop out. How many guys want Charlene to pop out? Come on. Charlene, you have to be there. You have to be there. I'm not going to Miami and not seeing Charlene.
Oh, of course. Are you gonna be? Are you coming to the summit or this year?
Yes, sir.
Okay.
I'm coming.
All right.
Miami once again.
Let's do it.
Sadly, I'm in NY. All right. Well, you could get a plane ticket.
Yeah.
You're not.
You're not stuck there. You can fly, girl.
Fly. You got it. It's okay. Yeah. So we'll have one in New York, Atlanta, Chicago, Miami. We'll have some really cool guest speakers. James Storms is a guest speaker, QB Stu, a few other people. Just hit Q Banks, ask him if he wants to be a guest speaker as well. So yeah, guys, we will have a lot of cool guest speakers there. Ready for NY? Let's get it. Let's get it, Evan.
Let's get it.
Perfect. All right, everybody. I'm Dipsetting out of here. Thank you, Charlene. Once again, appreciate and love you.
Thank you for having me. I appreciate it. Much love. Much love right back at you, my guy.
Of course, of course. Bye, guys. We'll see you. We'll upload the recording to YouTube, okay?
All right, guys.
All right, peace. Peace. Peace, everybody. Peace, peace, peace. Don't forget to tag us, guys. Tag us on your Instagram. Tag the Goal Father, Charlene, and May. Thank you, guys.